Order blocks for dummies part 2 with the use of Bollinger Bands. If you're struggling to take that trade successfully with an order block, an area of supply and demand, or an area of balance, and you're not quite sure, then adding the Bollinger Bands is going to assist you to find those trades. So let's dive straight into this video today and we'll have a look exactly how you can use the Bollinger Band. So the first thing you need to do is place the Bollinger Band onto your chart. I will show you what actually the settings are we've used. We use 21 setting, which is the period with 2 deviations. That's all you need and apply it to close. Now, how you're going to use the Bollinger Band is when we see price at the outer band area, this is where we're going to be looking for our trade with the combination of our trend, understanding market structure, and the use of the order block or area of supply and demand. Simply, the idea of the strategy is to see where price is overbought or oversold when it goes into your zone. So we're going to look at first this area here on the chart. So what I'm going to do is just go through and show you where we see this low in the market. We see the break on this big bearish candle. The area which breaks that area is this last bullish candle, which will be drawn out from the high to the low for your order block. And it's also an area of supply. So you're looking for price to come back to this area. At the same time as price comes back, you want to see this passing through that outer Bollinger Band to show you that it's overbought that point, and it happens right here. Now we have a couple of choices when we're taking an entry. We can look for an entry here at the area as it touches the zone with a stop of the high. This is what we call that set and forget strategy. Now there's much more detail on using that and the confirmation entry and change of character inside the FOREX Masterclass. And if you want to find out more on that course, the link is below in the description of this video. Now there is also a video inside the channel that briefly goes through the set and forget strategy and how to apply it. So do check that out as well. You will find that if you check it out in the channel after this video. Now, of course, the other option is going down looking for what we call that change of character. Now, the change of character or the confirmation entry is we're looking on the lower time frame as price comes into this zone and passes through the outer band. We're going to look for that reversal to look for our trade entry. Now, typically, if we're on a daily time frame, the best time frame to look for entry now will be on the 1 hour time frame. I do suggest looking at using this type of strategy on a higher time frame first, as it's going to give you more confidence when taking a trade. So here we're going to look at this area now on a 1 hour time frame and looking for that change of character, that confirmation entry. Now, if you're not sure how to trade with that, don't worry, keep watching this video all the way to the end and you'll be able to watch the change of character video. Now, of course, if there are any questions on this strategy as we go through the video, don't forget to leave a comment below and let me know what your question is and we can look at that together. So now we'll go down to the 1 hour time frame and we'll look at this area on the chart. So now we're at that area of the chart where we saw price passing through the band on the daily time frame. This is where we're seeing the 1 hour time frame pushing up, and look at this strong momentum move into that area as the candles start to weakening off. You can actually identify this with candlesticks. We can see by the smaller the candle goes into this area, then we have a consolidation and eventually break to the downside on that bearish candle. This is where we're seeing that break of structure and that area where we see that change of character. Where we see it breaking through, notice this small bullish candle, that little bullish candle right there. You could draw out as your order block area. And that is where price breaks through, pulls back, tests it on a couple of occasions, and then we drop away. You could target these lows and look at the risk to reward on that trade. That's why using a change of character confirmation entry on a lower time frame, combining these two time frames on a daily and a 1 hour will help you to find these types of trades. Now, of course, if you don't have the time to go down to a lower time frame, and you'd rather just trade that set and forget strategy, it's still highly profitable. Now, if we go to a 4 hour time frame here and look at a similar area, we're looking at where price is actually breaking this low. We then pull back, we make a manipulation of this high, and then we break this low and this low to downside. What does that now leave behind? That leaves behind this area, which is an order block, and you can draw it out as an area of supply. Once again, what you can look for is price to actually go into this zone and to pass through that band. That happens right there on that bearish candle. The spike goes into the band, then we see price fall away. Now again, you could look at a simple entry here at the set and forget strategy, targeting these lows. You've got at least a 2-to-1 risk to reward. Now that is giving you a profit still in the market. But if you want to increase that, now what you can do is go down to a 15-minute time frame. So we'll go to this area where we see that spike up and we'll look for that change of character once again. So we'll go to 15-minute. This is that spike up on this pin bar. Now, if you understand candlesticks in the market and you understand manipulations, this high is manipulated by this one candle. And you could have sold right here on that one pin bar. And you can see the market drops, it breaks this structure low, which in turn leaves you this area here of an order block. And we see price returns back up to your area for an entry. Your stop loss will be just this area here. And then you see the market drops to these previous lows. Now you could obviously look to trail it or look for a higher time frame target. But looking at these lows, you're always going to see the market look to take these lows out when it's going to take out those stops. So typically, using the Bollinger Band method will allow you to see where the markets are going to come back and to give you that entry. Now remember, we're only looking for the market to pass that band on the higher time frame. This is set up time frame. When you're looking for the confirmation entry, you don't need to do this, which is that change of character. If we go back in time, just look for an area where we can see the market creating that pullback. So right here, we can see where the market has passed through that bottom band. Now, at the same time, we can identify when we see this market rallying up, we break this structure area, leaving this area of an order block. So we can identify by drawing this area by the high to the low of that bearish candle. Now, if we just go closer into the chart, let me just remove this and we'll put a line. And we'll go closer into this area right now. So this is how you use this set and forget strategy. Now, if you're using an area of demand, you draw it like this. You see the market still comes back in. You're going to use that order block. We're looking from the high to low to give you that range area. Now, as price comes back in, we're looking for the entry to go below this band. So you're not going to look to take a trade until we see it going below it. And eventually we can see we go below through that bottom band into this zone on this bearish candle, this big push down. Here you can look for a trade on this set and forget strategy, targeting these previous highs. So even if you're taking an entry, let me just remove this area. So if you're taking an entry at this level, or even at this level on an area of demand, your stops at low here, this is your target in these highs. Look at the risk to reward still on a set and forget strategy. Now, obviously we can increase that risk to reward if you go down to a lower time frame here, looking for that change of character on a 15-minute or even a 30-minute. Now let's look at a 30-minute quickly. Let's find that area. So as price comes in, now this is the push down where we see price coming into that area where we have that big push down into the outer Bollinger Band at the same time. At this point, we're going to start looking for that change of character. So when we see price eventually making this low, we're looking for price to make that change of character. Now we make this small swing high and a higher low and we break up. So once we've seen this, you could mark this out as an area. So we just get my tool. So we can mark this small bearish candle as your last order block out an area of demand where you break this structure here to the upside. We can see price then comes back into that area and we can take an entry on that confirmation entry or that change of character. And you can even look for a first target at these highs, looking for that final high here for your final target. But look at the risk to reward now on that trade compared to this area of risk. That is how you can increase that risk to reward by actually using a confirmation entry or a change of character. So I do hope that you've understood the potential of applying the Bollinger Band to give you that added aid. Just remember, when we're looking at a Bollinger Band to come back to an area of an order block or an area of demand, in this occasion, we need to see price going below this band for your entry. We want to see it passing below to make sure you actually capture that trade. Now, I do believe, looking at this now quickly, we do make 2 moves below. So let me just quickly go back to the area on the 30-minute. This is the first time we go below. This is the second time. Just double check that. I don't want to tell you anything false. So this is the first time we push in. When we see the market pushing in for this first time right here, we've got to see the market breaking structure. It does break structure here to the upside, a minor structure break. This is then your order block, and we come back into it and we see a rally away. Then the market pumps back lower, taking out these lows in the market, and we see the same thing happening again. So yes, you had a first entry here, and even if you took your first entry and your first target, should I say, at this area, you're still risk-free in this trade and you still wouldn't lose anything on that first position. It's reading the markets with that change of character out of that area on the Bollinger Band where we're seeing the markets going outside where it's oversold in this situation at an area of an order block or even this area of demand. Now, if we're looking at this as an area of demand, you can see using a supply and demand approach, we don't even come into that area until we see this push in. So we just actually move this line. Now, also at the same time, this is something you learn inside the masterclass course. This is also what we call a tested zone. So a tested zone basically means when we see price breaking out, we've pushed back inside this bearish candle and we need to see the market go lower to pick up a trade. Now this is taught in much more detail inside that FOREX masterclass. And right now you can actually get the masterclass course on a cheap payment plan to allow you to actually get the course if you wish to sign up. This will be your entry level. This will be your stop. Now look at the risk to reward. There is your risk. There is your reward. That is how you can start capturing those high risk to reward trades with the use of the Bollinger Bands. And this is all about order blocks for dummies or supply and demand trading for dummies. And this is the part 2. Remember, the first part we went through the use of 2 EMAs. This is now using Bollinger Bands. Indicators do not move price. Price will move the indicator, but this does not mean you cannot use an indicator to give you an added aid if you struggle to see it just on the chart. So I hope this video has been insightful. Hope it's going to help you going forward with understanding how to trade the use of supply and demand or order blocking your trading, and how we can add an aid to our trading with the use of an indicator simply added in from the MT4 platform. Now, if you have enjoyed this video, don't forget to give me that thumbs up. It's going to help me to know you're enjoying these videos. And coming up right now is that video I said on the change of character. So if you're not sure how to trade it with the use of change of character, make sure you watch this video right now all the way through and you'll understand how to use that with this strategy.